With interest rates being up now around 8%, a lot of buyers are worried about higher housing payments. And if you're thinking about buying, you might be one of those. So today we're going to talk about two popular options on how you can get a lower housing payment. The first one is the 2-1 buy down, which has been pretty popular, been promoted a lot by lenders. And then there's another one that we're going to talk about that I think is also a good strategy. With me today, I have Ryan Manley with Guarantee Rate. Hey Ryan, how's it going?
Joe, I am doing great today. How are you doing?
Good, good. Thanks for being here. So, Ryan, let's talk about 2-1 buy downs. Let's talk about the permanent buy downs, what those are, and how they can help people get lower payments. So, let's start with a 2-1 buy down. What is it?
So the 2-1 buy down came out earlier this year as an option to get interest rates down. And what it is it's basically the seller paying money to buy your interest rate down for the first 2 years.
Okay.
So for example, let's say that we're at 7.5 for an interest rate.
Okay.
In the first year, you're going to be bought down 2 percentage points. So rather than 7.5%, you'd be at 5.5% payments for the first year.
Okay.
Year two is 1%. So instead of 5.5, you're going to go up to 6.5.
Okay.
For example, with today's market rates. And then starting in year three, you would be at the full rate, which in this case we'll say 7.5%.
Okay. So, year one, 5.5, then year two, 6.5, and then year three, whatever the current rate is. So, 7.5, right?
Yeah, so it's using
Okay.
today's current market rate. So you're just starting at, let's say, 7.5 today's rate, and then first year you're getting it down 2 percentage points, and then year two you're getting it down 1 percentage point, and
Okay.
starting year three you'd be back to the regular market rate of the 7.5 as of today.
So, what's the benefit of doing the 2-1 buy down? Obviously, the seller's paying for it, so that's great. But what's the benefit of it?
Yeah, so it was really created earlier this year by lenders as a program to get interest rates down when they were going up this year. And, the philosophy and the thought was that we were going to be lower interest rates this time heading into 2024 as well.
Okay.
The thing is, we've seen interest rates actually go up more since then. So the question is, should we do a 2-1 buy down or should we do a permanent buy down is really what to look at.
So basically, the premise was you would get this 2-1 buy down, and then rates would go down, and then you could possibly refinance into a fixed rate that you could just keep for the term of your loan, right? But what you're saying is rates have increased more than we were expecting, so there's a chance that with the 2-1 down, after 2 years or 3 years, you might be, quote unquote, stuck with that original interest rate that you still have to qualify for, right? But if you're expecting rates to go down, that might be maybe not as affordable, or might be unaffordable for you at year three, right? So
Yep.
you have another option for us, right?
Yeah, exactly.
Okay.
So, let's talk a little more about the 2-1 buy down and kind of the philosophy behind it and why we're thinking that maybe a permanent buy down is better. Let's say that I'm looking at buying a house and I'm pushing my budget with interest rates, let's say. So, let's say I'm looking at a $500,000 house and that's really pushing my budget, but I look at the 2-1 buy down and say, great, that makes it very affordable for year one and two.
Okay.
My concern is that, we can't predict rates. And if I'm pushing myself budget wise and I hit that year three and it's still go back to that full rate, and rates don't change for 3, 4, 5 years, I'm going to put myself in a tough position.
Right.
So maybe what I would do instead, and we're seeing less buyers right now. So I know, okay, maybe if I write an offer, I can get the seller to pay concessions or pay fees to buy my interest rate down permanently. That might make me feel more comfortable. So, let's take a case where, I want that $500,000 house and I don't want to have to worry about will rates come down.
Sure.
What I maybe would do is ask the seller, have my agent ask the seller, can we do seller concessions? What basically they would be doing is paying a fee, which is known as points, to buy down at interest rate permanently. rather than doing a large buy down in the first year, 1% in the second. I'd ask maybe if they'll do 2 points, which will probably get us down about 1% or maybe a little bit more.
So let's do kind of a very rough estimate example. So let's say rates are at 7.5 now, right? It's fluctuating every day, but if we're at 7.5, and let's say at 6.5, you would feel very comfortable to have that permanently for, many years, 5 years, 6 years, 10 years, whatever. Let's say a $500,000 home. What would that cost, or how much concessions was kind of a rough estimate of how much the seller would have to pay to bring it from 7.5 to 6.5?
Yeah, so I mean, we'd be if we can get 2% or 2 points from the seller,
Okay.
have them pay that, and I'd have to take a look at the exact numbers. These are just rough
Yeah,
estimates.
very rough, very rough. Just kind of like, talking about 5,000, 10,000, 20. I mean, I don't know, I have no idea.
Yeah, so if let's say if I'm looking at a $500,000 loan, each point is equal to 1% of your loan. So 1 point or 1% is 5,000.
So
So if I'm
10,000.
having the seller pay, let's say 10,000 to buy my rate down 2 points, maybe I'm going from 7.5 to something in the high sixes, and that would be permanent. So that's not just for a year or two.
Sure, that would
That'd
be
be for
permanent,
the
yeah.
life of the loan.
So in the seller's mind, they're selling their house for 500,000. You ask for 10,000 in seller concessions. So their profit would be more or less, or gross profit would be about 490. So some sellers would be willing to do that, especially if they've listed their home and it's been on the market for a while. They're not getting any other offers, so it's a good option for the buyer to afford the house, have a lower payment permanently, and for the seller to sell their home. To me that seems like a potentially a good deal, right? If the house is not selling.
Yeah, and you make a great point there, Joe. From a seller standpoint, let's take a look at it that way. If I've got my home on the market for, let's say, 500,000, and as a seller, my home has sat there for 30 or 35 days or more, the agent may come and say, well, let's do a price reduction of 15 to 20,000. So rather than doing a price reduction, if I'm willing to pay to get the buyer's interest rate down, I'm going to be doing less out of pocket. So my net amount I'm going to get for my sale is in a better position. And by that seller reducing by 20,000, it really honestly doesn't impact the payment as much as
Sure.
if they were to do 10,000 to buy the buyer's rate down
Sure.
permanently. So it's, in this market where we have less buyers and sellers still want to sell, it's a win-win for everybody involved.
What I love about the permanent buy down is, it's there's no right or wrong answer because with a 2-1 buy down, right? If after 3 years, it's possible the rates could be down, and maybe they're going to be lower than, let's say, 6.5%. Maybe they're at 5, and then at that time you refinance and you're super happy. But if it's not, right, that's where you could get in trouble. But with the permanent one, you go from 7.5, let's say, to 6.5. That's going to be fixed. You don't have to worry about it. But if rates do go down, let's say to 5%, then you're at 6.5, right? You could still refinance, and there's a little math you got to figure out, depending on how long you're going to be in the house and the cost to refinance or whatnot. But at least you have that option, still refinancing, and you don't feel too bad about it because the seller paid for it. So it's kind of a win-win for everyone. And so I think this is a great conversation to have, because I know the 2-1 buy downs are being pushed a lot, which there's some benefits to it, or also the saying, marry the house and date the interest rate or something like that, but it's not guaranteed that rates will go down within the next 3 to 5 years. Most likely they will, but you don't know.
Yeah,
And
that's the great point, Joe. Is you're absolutely right. We can't forecast. We can try, but we're not always right. And with that 2-1 buy down, I just feel like it's putting maybe some buyers in a bad spot. If they plan to be in a house long term and pushing the budget. It's a different story. If, let's say, I was going to be in a house for 3 or 4 years, shorter term, okay, great. The 2-1 buy down, probably makes more sense than a permanent buy down. But if, I feel I'm going to be in a house long term, right now, I would probably go with the permanent buy down versus the 2-1 buy down.
especially too, because right now, as a buyer, you have way more negotiating power than 6 months, a year ago, right? You can do home inspections. You can possibly get some seller paid concessions for buy down or permanent buy down, and maybe even some closing costs, right? So it's all negotiable always, but right now you have more power to do that. So I think that's one of the biggest benefits in this market. Now you still have to qualify, still need to be responsible, right? Be honest with what you can afford. So working with professionals like Ryan or other lenders that will give you all these different options so you can make the best decision. Working with a professional real estate agent that will help you negotiate, give you information about what the market's doing, where it's going. That's very important. Speaking of, if you want to stay up to date with the Rochester market, make sure you subscribe to this channel. Ryan and I do videos monthly where we have these conversations about what's going on, what are some of the strategies. And our goal is not just for you to buy a home and we'll forget about you. We want you to be successful homeowners, and let us know in the comments below what questions you have about the market right now, or anything about what we talked about. Anything else you wanna add, Ryan?
No, it's all about strategy right now, Joe, with the interest rates, and it's working with a lender and an agent, like you said, that will be able to give you the right advice and strategize on your own situation.
And if if you're in a position where right now it's not the best time for you to buy a house, whether it's credit, income, or other factors, that's okay too. But let us know and we can definitely help you. Thanks for watching.